Welcome everyone to Netaji Subhash Open University. Today in this session we will be discussing on the significant concept of supply under the Goods and Services Tax. All of you know, my friends, that Goods and Services Tax has been implemented in our country from 1st of July 2017, and this act has been implemented in our country in after subsuming all the different types of indirect tax laws that were prevailing in our country for so many years. For example, central government used to levy tax under the head Central Excise Duty on all manufacturing goods. Central government also was recovering taxes on services called as service tax. State governments were levying taxes called as VAT, value added tax, entry tax, and so many other taxes. There was a need, there was a call that all these taxes should be clubbed together to make one simple single tax regime in our country that called as Goods and Services Tax. When Goods and Services Tax that has been levied, that has been implemented from 1st of July 2017, the basic question that come out that on what this tax would be levied. In other words, to explain, the sales tax or VAT was levied when the goods were sold. That means a seller is selling the goods to the buyer, or buyer is purchasing a goods right from the seller. There is a sale and purchase transaction, and on the transaction the tax which levies is called as Goods and Service Tax. So, right, earlier it was called as VAT, value added tax. Before that it was called as sales tax, and now it is called as goods, GST, Goods and Services Tax. So earlier it was a sale of goods, and earlier before 1st of July 2017, whenever there was a service was provided by a service provider, say for example Airtel or BSNL is providing services, telecom services to the customer. So in that case, the issue that comes out, the tax levied on the telecommunication service, insurance service, banking service, hotel services is to be called as, earlier is to be known as service tax. Now this provision of service and sale of goods, these two words also has been merged, and a new concept has come. That concept is called as supply. And this session we will be discussing on the concept of supply, that what do you mean by supply within the definition of GST provisions or GST law. My friends, you can look into the section 7 of the Act, which has given a detailed elaborated definition of supply, but let us understand the law in this particular forum. Supply means and includes, this is a very good definition. It's like a inclusive definition, and in the definition what has been told, that supply includes all forms of supply of goods and or services, such as, so there are a lot of examples, such as sale, transfer, barter, exchange, license, lease, rental, disposal, right, made or agreed to be made for a consideration by a person in the course of furtherance of business. So lot of things are there within a small definition. That means whatsoever way you like to provide any goods or services, whether it is a sale, whether it is an exchange, whether it is a barter, like you are bringing one material and you are in exchange you are taking another material, an exchange of services, right, a rental of property, rental of goods, rental of services, rental of land, a lease, and then the disposal, right, made or agreed to be made. That is very important. That means the law keeps a provision that if something has been done within the definition of supply that is taxable, that's a taxable event, that means it will be taxable. And at the same time, if something has been agreed upon, what do you mean by agreed upon? That means you receive some amount of money and made an agreement that tomorrow or day after tomorrow you are going to supply the goods or services. The law says this also shall be taxable within the definition of goods and services tax. And there has to be a consideration. There has to be a consideration by a person to right in the course of furtherance of business. So, in other words, in the course of furtherance of business. So, you are in a business, irrespective whether it is a profit making or is a non-profit making. If there is a transaction and the transaction there is a consideration, then it's definitely going to be taxable. This is part A. What is part B speaking? It says importation of services whether or not for a consideration and whether not in the course of furtherance of business. That means if a service is imported from abroad, like if a importation of goods, if goods are imported from foreign country, the tax that is levied on that is called as customs duty. Now, if a service is received from outside or imported from outside, say a software has been developed outside and that is coming to our country, which will be used in my manufacturing process, a technical know-how or some other services, say a technological drawing or designing is coming from some abroad country, it is liable to be taxed in our country under the law called GST. And not in this chapter, not in this today's program, and another session we will be discussing that who will be chargeable to GST in that case, right? In that case, the recipient who is bringing the services in India shall become liable for taxes. A supply specified in Schedule 1 made or agreed to be made without a consideration. But this is also, my friends, this is also within the definition. It says a supply specified in Schedule 1. What is Schedule 1? There are few schedules has been given, and this Schedule 1, I will give you an example. It's like I am supplying I am sending my own goods from my factory or my godown in West Bengal to Delhi, right? I am not selling. I am just shifting my goods from my plant to my depot or to my branch office, and in that case, whenever the goods is moving from one state to another state by the same person, it is not a sale. Despite that, this will be treated as a supply, and this supply would be liable for taxes, right? Liable for taxes. That means without payment of taxes, you cannot move the goods from one place to another place, particularly in case of interstate movement. You understand? Interstate, one state to another state. But the law says precisely that anything and everything is taxable. So, there is a Schedule 3 which gives some sort of a relief that in respect of the items mentioned therein in the Schedule 3 or which may be subsequently added or modified in that particular list, nothing would be taxable under the GST law. So, it's definitely is a good news that something is exempted. And what are the exempted? Number one is like if an employee is providing service to the employer. My friends, all of you please listen it very carefully. Employee is providing service to the employer in the course of employment. So, if I am coming to my office providing my service to my employer and for which I am getting a salary, this service is not liable for GST. So, obviously, there is a contradiction. You can understand there is a contradiction. There could be a reverse view where the employer is providing service to the employee. So, if the employer provides certain service to the employee, that would be chargeable for GST. Like free transportation service, free canteen service, free medical service, or some of the free education service, some sort of a service, some sort of a facility, some sort of a supply which employer may provide to the employee would be liable for GST goods and services tax. Few more exemptions. in Schedule 3. It's like certain things as may be notified by the government, but as of now the Schedule 3 says like some supply of services or goods at the funeral or at the burial services, like the Antim Sanskar, for that if any supply is made, that is exempted from this law in Schedule 3. In the registration under the for land and building procurement, the registration for which Stamp Duty Act is applicable, similar to that such a registration of land, building and others, GST law is not applicable. That is in Schedule 3. It gives a scope that so many other things which may be notified from time to time by the government, and that requires a total understanding of the basic fundamental concept of supply, that anything which is not mentioned in Schedule 3 and there is a supplier who is supplying either goods or services, there is a recipient who is receiving either goods or services or both. That means you go to a restaurant, ask for a food and or a beverage, and it has been served on your table. That means there is a service, there is a goods, and it will be a composition of that. It's called as goods and services. And on this goods and services, definitely the tax which is going to be levied is called goods and services tax. Now, if we have understood what is goods and services tax, two fundamental big issues that becomes a challenge so far as goods and services tax are concerned is the question comes out, what is the time for levy of these taxes? What is the time for levy of these taxes? And then what is the place for levy of these taxes? Now let's first understand what is the place of supply of the place of supply rules or the place of supply under the Goods and Services Tax Act, and then definitely we'll understand what is the time for supply of goods and services. And why it is so important time? Time is important because if it is supply is made in the month of say March 2019, the tax liability for that shall be payable in April 2019. So we have to be very careful about in which month the supply is going to be confirmed. At the same time, in which state the supply shall be considered as supply has been made. Before going to this particular area, let me once again clarify the basic proposals of the applications of this law. We have got Central Goods and Services Tax. We have got State Goods and Services Tax, called as earlier one called as CGST, Central Goods and Services Tax. Second one is called as State Goods and Services Tax, and the third one is called as IGST, Interstate Goods and Services Tax. There may be a fourth category also, which is called Union Territory, UGST, Union Territory Goods and Services Tax. So, like if there are certain Union Territories, Dadra and Nagar Haveli, that is in Silvassa or in Daman, the transaction is taxed with a law called as UGST. Within a state, that is called intrastate. Like from Calcutta, I am sending the goods, means I am supplying the goods to a person who is in Durgapur or in Asansol or in Shiliguri, that is within the geographical area of West Bengal. The tax that I am going to levy is in two parts, right? 50% of the tax will be levied in the name of CGST. Assume a practical example, 100 rupees is the sale price of a goods and the applicable rate of tax is 18%, 18%. Out of that 18%, 9% will go to the central government called as CGST, and then balance 9% will be credited to the state government, state of West Bengal, called as WB West Bengal GST or WB SGST. And in case of interstate movement of goods or services, interstate, like a manufacturer is in West Bengal and the goods are going to be sold out in Maharashtra, in Mumbai, or opposite, The manufacturer is in Maharashtra, that's in Mumbai, and then goods are coming to West Bengal. Which tax it would be levied? It would be definitely GST, but that GST is known as IGST, Interstate Goods and Services Tax. Incidentally, that rate of tax on IGST is also 18%. And interestingly, that 18% has got again two parts. 9 goes to the central and 9 goes to the state. So here is the background for this particular topic, the topic that's called as place of supply. That means which state shall be considered as the place of supply for collection for getting of this tax amount. So let's read the law what it says. It says that where the supply involves movement of goods. So there is a movement of goods from Maharashtra, from Mumbai, the goods is coming to Kolkata, whether by the supplier or by the recipient or by any other person, the place of supply of the goods shall be the location of the goods at the time at which the movement of the goods terminates for delivery to the recipient. So, the goods is coming from Maharashtra, from say Mumbai, goods are ultimately reaching in West Bengal. For what? For why? Not ultimately to be handed over to the recipient. Who is the recipient? The recipient who is in West Bengal. Which tax it was levied in Maharashtra? IGST, because it is an interstate. Out of that IGST, 9% means 9 plus 9, 18, 9% gone to the central government. Question, the balance 9% which are actually deposited in Maharashtra through the national network, GST network, that 9% ultimately transferred to the government of West Bengal, right? Government of West Bengal get this 9% because the goods are ultimately reaching and the movement of the goods terminates. Kiske liye? For what? For delivery to the recipient in the state of West Bengal. So, in this case, the place of supply of the goods shall be considered as West Bengal, even though the goods is transferred from Maharashtra to West Bengal. This is the fundamental conception of the supply of goods. There is a supply of goods. There are few exceptions like in case of hotel. In case of a hotel, the place of supply shall be considered where the hotel is actually located. That means the state where the hotel is actually located. In case of telecommunication services, that means mobile services. Say if it is a landline services, then the place, the state, the city where the landline is located, that particular state is the place of supply. And in case of a mobile, where the registered address is registered with the supply provider, service provider, shall be the place of supply. Now, understanding this, the last part of this session we will be discussing on the time of supply. Why time is very important? Because the month the supply shall be considered has done, the next month, right, 20th of the next month, you need to pay the amount of taxes. This portion will be taking definitely in another chapter called as return and payment, submission of return and payment of GST law. But for understanding, month of March, the tax liability need to be paid by 20th of April. So we have to be very careful about understanding the time of supply. And what the time of supply says, the time of supply in case of goods, if there is a supply of goods, then the time of supply says that earliest of this ABCD, earliest of this 4. What is that ABCD? That means when number 1, when the goods are removed by the supplier for supply to the recipient and the goods has been removed, say from the plant or the godown, when the goods has been removed. 2, the date on which the supplier issues the invoice in respect of the supply. So, from my factory, 1st of March the goods has been moved. My invoice I have made from my central marketing office on 10th of March. Number 3, the date on which the supplier receives the payment in respect of the supply. It may so happen that I have received in advance. It is very much possible. I have received the money in advance, or say I have received the invoice was made of 10th of March, payment was received on 15th of March. And 4, the date on which the recipient means who is receiving the supply, shows the receipt of the goods in his books of accounts. That is say on 4th of April, because the goods are transported 4th of April. So 4 dates we have received: 1st of March, 10th of March, 15th of March, 4th of April. The law says out of these 4, whichever is earliest, whichever is the first. So 1st of March shall be considered as the date of supply, time of supply, and if it is 1st of March, then the payment of taxes, the liability for payment of taxes falls on 20th of April. My friends, you have to be very, very careful, both academically as well as professionally, to understand that this timing gap, because if you fail to pay it on 20th of April, then in interest, penalty and other procedural issues would be commenced. So that will take up in another chapter, but it is the fundamental areas. What we have understood in this chapter, my friends, we understood what is supply, the broad conception of supply, that means it covers everything under the earth unless it is specifically excluded in Schedule 3. We understand the concept of the place where the supply shall be considered has completed. We understand the concept of time, that means the time when the supply has been deemed or considered to have been completed for determination of the tax liabilities. Thank you, my friends.